guys, I'm Jen, your host of Blockchain Banter. Thank you so much for joining us for another episode of Trading Crypto. I'm here with our always wonderful panelist, Keith Allen, co-founder of Material Indicators, TA and algo trader, and order book analyst, along with Dr. Mark Richardson, project lead at Banter and Carbon DeFi. Thank you guys for joining me. Koryo won't be able to make it. I know he'll be here next week, though, so we look forward to that always. Keith, before we started, we were talking about some Mt. Gox stuff. We were talking about some crypto Twitter, some kind of little bit of a ridiculous, predictions that we had seen. What's the latest on your side? Any of the above, or please feel free to pull up some FireCharts and tell us what you're seeing in, in the order book.
Yeah, it's all nutty. It's crazy. I think we could just, I think, there's a lot of differing opinions. I think the one thing that we can all agree on is things are a little bit nuts, and I'm finding it difficult to understand completely what's happening with the price action. My levels haven't really changed, and that's all kind of intact, and the macro trend is still intact. But we're seeing, ever since the all-time high, we just have not. Even with the ETF demand, we're not seeing any real momentum move out of this range. And, I've been saying for a long time that I expected that we would likely, based on where I'm seeing liquidity, where it is and where it isn't, and where it isn't is equally as important as where it is. I just felt like we'd be in extended, ranging for an extended period of time. And that seems to be the case. Right now, where the bottom is remains to be marked, in my opinion. And likewise, you had mentioned Mt. Gox, and I will tell you that I am the last person to pay attention to crypto Twitter FUD. But I do recall a few weeks ago that some Mt. Gox coins were moving. Now, we've heard about Mt. Gox since I bought my first $100 worth of Bitcoin in 2017, 16 or 17, I think it's 17. I've been hearing about Mt. Gox, right? And there's been lots of FUD over the years, like, oh, the Mt. Gox distribution is happening. Well, we've not really seen it. And then I want to say it was a few weeks ago, or maybe last month. There were some reports that some coins from Mt. Gox wallets were moving. And I think I actually looked that up on Arkham and did see it, but I don't know what happened from there, and I haven't followed it at all from there. So I'm wondering if any of those coins, and if anybody in the audience is in tune to that, by all means, throw a comment in there. But I'm wondering if any of those coins are being distributed at this point, and that may be what is feeding the ETF demand. ETF demand has been down for the past few trading days, but that's normal too, right? The market is moving outside of their trading hours, right? The real movement seems to happen outside of those TradFi hours when they're able to trade those instruments. And the reports that we're seeing, and this is a little bit misleading, I think, the reports that we see in terms of net inflows or outflows daily, net flows daily. Those aren't submitted until all of those funds settle at the after hours, right? So that doesn't mean that if John Q. Public is trading on his Fidelity account, that he can't purchase the Fidelity Bitcoin ETF at any time during the normal business day and get that price. It just means that those flows don't settle until the end of the day. His trade may have settled, but they're not reporting until well after hours. So I'm not super clear on what impact that's having on price. I think that most of the movement, like I said, seems to be happening within the cryptoverse after hours. In between after those TradFi hours, and certainly on weekends, right, where we've been seeing some bigger price movements on the weekends when TradFi is locked out, right, until the crypto market opens again. So Those are things to kind of, that I'm kind of speculating on. But in terms of where the levels are, not a lot has changed in terms of the order book or in terms of the levels on the chart. And we can look at whatever you want. We can start with FireCharts, I guess, because that always seems to be a crowd pleaser. And look at where liquidity is moving, because that is very telling to me. Koryo asked me a couple of weeks ago, how do you make, where's the actionable intel in looking at order book and order flow like this? And that's a great question. And, yes, you can look at this and you can look at, or you could simply look at technical analysis and figure out what your levels are, right? Right. You see where the brighter spots are. That tells you where resistance is. It tells you where support is. And you can see just by looking at this, and we're on a weekly view right here, you can see that, well, resistance looks stronger. There's more volume on resistance than there is on local support. And if we zoom out to that, to get a bit different perspective, we're going to see some things that, depending on your bias and your perspective, are either going to make you feel good or are going to concern you a little bit. So just zoomed out. This is a 1-year chart.
Wait, Keith, you're not sharing your screen.
Oh, well, that's why I have you here to tell me that you're not seeing it. See it perfectly.
I was waiting and I was like, okay, maybe he's just prepping his, you know what I mean? Like,
well, I was, but I thought I was doing it live. But I thought I was doing it live. That's so funny.
Okay, let's bring the visual up here. There we go. Better. Now we're in business. Thank you.
All right. And, just make sure, do I have enough tabs open for you guys? So as you can see, and this has been an issue for quite some time. I've been talking about this since we got to since we nosed into that all-time high level. We have much more ask liquidity, aka sentiment, aka strong ass resistance above this level, above 70K, than we have for local support. And it's good that we now have a ladder of bids extending now down to the 50K rate. Actually, we even have a little block right here. It's hard to see. Let me boost the contrast in the chart a little bit so you can see that we actually have a little bit that has moved into this 45K range. And you remember I've been talking about that level for quite some time as well. So strongest local support just in terms of bid liquidity, obviously right here in this near range. Yesterday, when we as we were heading into the weekend, I was concerned about 65K, losing 65K. If we lost 65K, I thought we could conceivably go to 60, and there wasn't a lot of liquidity here. Now you can see that things have moved a bit, and that we do have a growing ladder of bid liquidity now extending down to 51. And another little block of about, 5.5 million or so down here at 45. That's not coming into play at this point, but it is notable that something moved there because there wasn't anything there for a long time.
I was just going to ask that. We've been talking about that point, but there hasn't been liquidity there. There's been nothing there.
So this literally just appeared last week. So I'm now going to move in a little bit tighter so we can analyze more of our near range liquidity. And again, you can see that we do have a small ladder down here, concentrations building, a bid liquidity building around 60K, a little bit more at 62, and another touch here at the high 63 mark, almost 64K. Okay, so we came through this 65K level last night, and that was a bit of concern to me. We also, over the course of the last few days, have lost the 50-day moving average, and that was a big concern, right? We were hitting it a couple of days, and I said, "Man, this looks pretty good. We're retesting this level. We're not wicking through it. It's holding here at the 50-day moving average." And then on Friday, we got a nosebleed, right? And it took us through that. I don't put a lot of stock in what happens on the weekends because that tends to right itself. And yesterday at the close, right after the close, actually, we punched through 65K. And so that was 1, 2, 3, 4, 4 wicks through that 50-day moving average. And then obviously we're looking at a pretty ugly candle right here. Yesterday's candle, kind of anemic. Don't like these doji candles. That's not a sign of strength. Losing the 50-day moving average, also not a sign of strength. So with all of that in mind, believe it or not, the bullish macro trend is still intact. But this is not a sign of this is not a sign of strength, right? So this is what has people concerned. And I mentioned in a post earlier today, because I think it's important to be transparent, that I don't get it right all the time. And I don't think that any trader that has been doing this for more than 10 minutes gets it right all the time. And anyone that does probably isn't telling you the truth. But I'm going to tell you how I play this, and I'm doing that to be transparent, but also to let those people know who are maybe new to trading or trying to figure out what to do, that you need to evaluate constantly and reevaluate constantly what's happening. And I had been looking, we've been talking about 69K for ages, right? It was the all-time high, and it was an area of strong focus for me. But we can see all the times that we've broken this. And I had a long discussion with one of our community members in Telegram that lent some insight to me, because like I was telling you before the call, I think it's important to have people, when you don't agree with somebody on social media, or better yet, in a real world conversation. Imagine that, right? The tendency on the social platforms is just to go at each other and be an asshole. Who's the bigger asshole, right? Or to cut people down. I don't find that helpful, and I also find that stressful and irritating. So I try to avoid that at all costs. But especially when there's people who I respect, or there's very few that I'm following on Twitter that I actually really spend much time with. But we've got some really amazing members in our Telegram community, as you guys do, I'm sure. And we don't always agree, but I do listen to their ideas and their analysis, and quite often I can learn something. And we were discussing that 69K level, and even though it was the all-time high back in 2021, that was significant, and of course we engaged with it several times here this year. It's prices run through it so many times that it doesn't have the technical strength that some of the other levels do. And so the local resistance right now is pretty high, around that 71.5 mark, right? So that's probably a stronger technical level. But when my angle on 69K is that it has served as a good indication of whether, you can't get to 71 without going through 69, right? and it's been a good indication that nothing has been sustainable. If we started seeing candles print above 69K and then we go after 71 and then, that 73.8, then I have confidence that that's a sustainable move. And so my whole angle on this has been, regardless of how you feel about this as a technical level, it has been a good kind of a gauge of whether we have enough strength and momentum to sustain, that upside move. And all of these wicks were evidence of that, and that is playing out. So that's fair play. But so is the fact that the real resistance to be focused on is higher than that, right? Above 70K. I maintain that we're not getting there until we start printing candles above there. But it may be premature. Selling at 69K is conservative, and nobody ever got wrecked taking profits early. But it may be a conservative target, whereas moving higher into the 70s may be more profitable for you. So, anyways, as I was heading out of town for Father's Day weekend, I knew I wasn't going to be able to focus on the charts as much as I normally do, and I, was looking at that, this situation here with the 50-day moving average and the potential breakdown and the lack of liquidity that we had down in this range, below 65K at the time, especially, this was back here, right? So I put in a trailing stop loss to protect just in case that nasty dump came. And of course, in true fashion, it came in the form of a wick and we bounced right back. But nonetheless, my position, and this was a partial position, but it was closed. So I took profits on that. No harm there. In fact, in the fact that I didn't lose any money. I made money. I made good money on that trade. But now I am looking to see price go lower so I can buy back in at a better price, and which was always my strategy to begin with. And I had been scaling out of that position, and I had taken some profits off the table, on the way up so far, but I hadn't taken all of it. So I had probably about 60% of that position left, and that closed yesterday on that wick below 65. So it closed around 64, 7 something, which in hindsight was probably premature, but I knew I wasn't going to be able to focus on the charts. I get a little peace of mind. Not everybody can sit there and stare at a screen for, 18 hours a day. I've got plenty of days doing that, but I'm also a dad and a family guy. And so I got to give my family that time. So that's part of my balance of time, that work-life balance, that I've got to put some measures in there to make some calls for me while I'm not able to look at the chart. So I think that I'm going to be fine, because I think that I'm pretty confident that we're going below 64.7 again before this is all said and done. So anything I buy back below that level is getting me more Bitcoin. So that works. But I just wanted to, I wanted to be transparent about that move, because I had said previously that I probably wasn't going to sell unless we broke below 60K, but I was in good profit. I didn't want to give it all back. So now where do we go from here? Is this level going to hold? And if it doesn't, where do we go? Right. So 60K to me is probably a little more psychological than technical. There are on the charts we can see there's some areas. This is a pretty big range, but to this I would say, and this is actually extending down to our local low wick down to that 56.5K, but we've been talking about a 58 to 60K range, and there's really a bit of confluence up here around 61 and change, 62 and change. So it's really difficult to just like pinpoint and say you're going to nail it, because to the penny, because price varies from exchange to exchange, and we're getting these wicks. So I look for a range, and I look to be close, and I do. I probably shouldn't say this, but I'm gonna, since I'm being transparent today, I front run a bit. So I make sure that I do get those positions when I really want them. So, I'm looking now at this level. Would we go to 58? Is it only going to go to 62? Well, guess what? I'd be okay just taking a little nibble on the way down and buying my way into that if it looks like things are going to degrade in that direction. In terms
Is that
of
kind of what you're setting yourself up for, Keith?
yeah,
Kind of that little nibble down, like that sort of.
We talked about this a long time ago, and that is that I have a tendency to scale in and scale out of positions. It's just
such
the
a
way
smart way to do it, though.
it's the way I'm comfortable trading. Yes, there's plenty of times where I get lucky and I nail it, because I had, my TA had good confluence with where liquidity was and it worked out, but it doesn't always work out. So I think it's important to identify a range that you're comfortable with. And again, if the end game is 6-figure Bitcoin, then do I care if I buy at 60 versus 58? I mean, psychologically, yeah, it'd be great to not have any orders higher than 60. Which is
but
where
then psychologically too, it's that peace of mind that you were just talking about.
Right. So, but
you know what I mean? So it's like all a psychological thing, really. You just have to find that comfort.
Right. But in the grand scheme of things, if we do see, if we see upwards of $100,000 Bitcoin, if we see $150,000, $125,000 Bitcoin by the end of this cycle, and maybe higher. I mean, I see all sorts of ridiculous numbers, and I won't focus, allow myself to focus on those. If they happen and I see that developing, then great. But I don't see it now. But if we're talking about getting to $125,000 Bitcoin by next year, then do I care if I bought it at 58 or 59? I
Right.
mean,
You
I'm
know
happy
what,
to.
when you would care is if you had your mind set and your heart set on that 58 and you didn't scale in and it
Right.
went to 59
And it
or
didn't go to 58.
58.5 and it didn't go to 58 and then you see it go to 120 or 125.
Right. And
That's
if it,
like, I mean, that's the alternative, right?
right. And now, of course, if it goes to 45, then I'm like, all right. So,
Fine.
but that's why
It
you have
hurts
stop
either way.
losses. That's why you have stop losses. That's why you take profits. That's why you stack powder. And so I'm prepared for that to happen too. I don't,
Yeah.
I don't see it. I don't see sentiment for it at the moment. We don't see, despite we saw a tiny little bit, 5 or 6 million in bids moving down to that level. So noteworthy that something moved there, but not necessarily, it's not like I'm seeing a $80 million buy wall down there. It's like, that's one guy, thinking that's his stink bid. And I have one there too, but mine's not big enough to show up on the chart. So, uh,
You're incognito.
right, right.
You're staying under the radar.
Exactly. So a lot of the focus and a lot of the importance to me right now is holding above that 58K level. And as you can see, most of the liquidity here is above that, even, right, above 59. It's above 58. We're at 59.5 ish, is where the lion's share of this liquidity is at the moment. And of course, this changes from time to time, which is why we stay in tune to it and we watch it all the time. But, um, the fact that we're seeing a mix of buying and selling here is always hard to get a beat on, right? So, purple whales have been my moral compass, throughout this, but they're also trading here and they're also trying to shake out some weak hands. So you have to, it seems like whales are distributing, right? ETF flow has been the demand, and unfortunately, we're not getting good reads on what's happening on the ETF flows from the other jurisdictions around the world. We know that Hong Kong is engaged in ETFs. We know that Australia is engaged in ETFs, but I'm not getting at the moment. I don't have great sources for that data on the daily basis, so I monitor what's happening here domestically in the U.S. And from this, we can see the last 3 trading days have been net negative. Grayscale continues to be grayscale. BlackRock has not, of all those net negative days, guess who hasn't had one? BlackRock has had one, it looks like. I'm going to the top here. Since January 11th, BlackRock has only had one day of net negative flows, and that was largely considered a rebalancing on May 1st, and we saw that across the board. So aside from that, there's been no outflow from BlackRock, which I think is pretty interesting. There's been days where they've had zero flow at all, but they've had no outflow, which is interesting to me.
Keith, first of all, thank you. I saw the other day that there were like 12,000 or something. It was like a big day for the outflows. Maybe it was like a week ago. Well, okay, here's the thing. I saw it on crypto Twitter. So we know how you feel about crypto Twitter, right? And I didn't do my own research.
So there
I
were
thought maybe since you had this pulled up.
Sure. There were some, we went like 19 days, I think 19 consecutive days with net positive inflow.
Yeah.
And then we started seeing some outflows, and those seem to be largely anchored by Grayscale, but we do from time to time see other players dumping. I think who's the second one? I think it's Fidelity, right? So FBTC is Fidelity. They've had a couple of days with large outflows. That May 1st, again, potentially rebalancing day was one of them. And let's see what this week looks like. So on the 13th, they had a sizable day, 106 million in outflows. And then yesterday, another 92 million, 80 million before that. So they're lightening their load this week, it appears.
Yeah.
So normal, right? I don't, this isn't panicky for me. And
what would be panicky for you? Like what would raise the red flag?
In terms of ETFs or just in terms of price?
Yeah, I mean, we're looking at this. Well, maybe both, right? We're looking at this and you're saying, you're not panicky.
Well,
but if someone else were looking at this, like, what is your idea of panicky? When would that red flag show up for you?
Well, number one, most of these, I would think, with the exception of maybe the very recent ones, but largely these guys, especially that have been buying since early January, are in profit. So I got no problem with profit taking. They haven't been upside down yet, right? They haven't been underwater yet. So what happens? What's their cost basis here? That I don't know. And we could probably do some research to figure that out. I haven't done it. Where's Koryo? Where's the data scientist when I need him? Where's Koryo?
This is something Mark says too, though. You know what I mean?
Well, Mark,
by all means, profit, right?
Mark, I expect you to be calculating this while I talk. I'll stall for you. So what's it going to look like if, and that's a big if, what's it going to look like if those positions go underwater? Are they going to bail? Yeah. Are they going to panic and bail and be a mass exodus, or are they going to ride it out because they bought into the broader, narrative? And, I initially felt like most of these people coming into this, into the space on the TradFi side were buying into the broader narrative, post-halving, ETF demand. And I was skeptical in the very beginning, but the more that I learn about the ETFs and read about it, I don't own any, and I'm not interested in owning any at this point, but I do feel like this is just really the very beginning for these guys. I think that we're going to see these ETF products evolve into a vast array of portfolio products that they're offering to their customers, to diversify their portfolios. And so I think that this is really the beginning. And I also think that we're going to see another wave of institutions come in and adopt these products to put into their portfolios, products to offer retail customers. So not necessarily these 10 entities who are selling them now, but others who will come, and are going through their due diligence process now. So I think the long term, and this is speculative to me. What's Mike saying? BlackRock bought 612 million worth on March 1st, current record for biggest day, and the price didn't spike.
He's got a follow-up comment.
Okay.
Probably take $1 billion worth of sales in a day to matter, likely even more.
Well, that's and I think a lot of it is coming, and I don't know the answer to this wholeheartedly, but I know that Coinbase is custodian for most of these domestic ETFs, and I'm wondering if they are doing these settlements over the counter across exchanges, because there's a lot of volume happening here that needs to be dealt with. So I don't know that Coinbase has the volume they need to do that. Now their volume has been growing for sure, but I don't know that they're able to do this all on Coinbase. Right. You got any insight to that, Mark? You're muted.
There's no way they can do it all on Coinbase.
Right. So you just have to, you got to wonder what it's going to take. And, Mike says it takes $1 billion. I don't know. I got nothing to gauge that on and verify that on. I appreciate the insight, Mike. And if you have some data that can support that, by all means, share that with us so that we can understand it a little bit better. Because this is, I think this is going to go on for this ultimately may not be good for the long-term health of Bitcoin. Either it's going to be great, or it's going to be a disaster, right? This is an experiment. And so my early assumptions are that we get, Bitcoin gets free advertising out of this, right? All these institutions are advertising across all platforms, including television, to market their products. That's raising awareness for the underlying asset. Okay, so it's not necessarily increasing adoption for any use cases for Bitcoin, other than as this investment, as an underlying investment in this asset class. Right. So, there's those of us who got into Bitcoin and potentially other digital assets because of, lots of political reasons by a lot of people, hedging against fiat, et cetera, the, inflation, hedge against inflation, all of these things. And that's all well and good. But at the end of the day, if price isn't going up, people aren't going to stay with it. Right. So those who are investing in the ETFs aren't getting direct Bitcoin in their pocket, in their wallets that they can transact with down the road, and they can't transact with their ETF holdings. Those are paper investment vehicles that they're going to get in and out of, and never have any direct exposure that they could transact with Bitcoin. They can't. There's certainly plenty of places in the world where you can go buy a house or a car with Bitcoin. They can't do that with their ETF. And so, in apps like Strike, Jack Mahler's app, Strike, you can go transact with Bitcoin at Starbucks or the grocery store. So none of that exists for the ETF holders. So to me, it's raising awareness. That demand, in turn, is driving these institutions to buy more Bitcoin because they have to back up what they're selling, right? So to me, that has been something that has helped keep price elevated. Meanwhile, we're watching a distribution event, which seems to be, large whales selling into this ETF demand, and that is why price isn't moving up. It's getting, we're not going down, but we're going down, but we're not going down as hard and fast as you would think, because so much of it is being absorbed by this ETF demand around the world.
We've got a XBT 3D. You joined us again. I want to say thank you. To both you and Mike for
the issue
comments.
is that while they are cash create is killing the network effect. In other words, he's an ETF. He's an ETF skeptic. Listen, I take a lot of value in what he has. He's been a long time member in our community, and I've learned a lot from him over the years. So I appreciate his comments here. But he is a Bitcoin purist, and so and an old school guy who has been in this game for the hedge against fiat, and so he sees no value in the ETF. Understandably, a lot of people don't see any value in the ETF, for that very reason. And I can't argue with that.
Feel free to chime in. Yeah, I know. I mean, this is something that we had spoken about. I think it was actually the DeFi debates call, Mark, when we were speaking about ETFs and maybe whether or not, how we felt about them overall. And
I think they just don't. I think they just don't matter at all. Like if I was to categorize myself as an ETF skeptic, I think that would be, it gives it the wrong flavor, because it means that I might think that Bitcoin is better off without an ETF, right? Or that the ETF is somehow detrimental in some way. I think they are completely irrelevant. Like that is honestly my perspective on them. I think that the history of ETFs sort of agree with me a little bit. And, I've heard a lot of people comparing like the gold ETF to the Bitcoin ETF and this kind of thing. And I think that there's a lot of poetic license being applied, to sort of like this revisionist history of the gold ETF, because like from where I'm standing, the gold ETF had practically no effect. And typically, as I've said before, the gold one is sort of interesting, but if you have a look, historically, ETFs have always been bearish, for the assets that they represent. Like, I don't mean catastrophically bearish. I just mean, like, in general, they fail to, to cause any significant price action. The interesting thing with the Bitcoin one is that it seems to be sort of a counterexample, that there is a very obvious, uptrend in the price. I think we can safely attribute to the ETF. But this is the exception, not the rule. And if it's sustainable, then great, like we'll see. But yeah, in the long run, I don't think the ETFs matter. I think Bitcoin will be fine without them, and I think Bitcoin will be fine with them.
And that speaks to the strength of the strength of the underlying asset for sure, right? But
Right.
I would, Mike makes the point here, since the high on March 13th, are ETFs up or down? Well, if they are attached or correlated to the price of Bitcoin, it's not a one-to-one correlation. They're all, like, the ETFs are priced as a fraction of a coin, and each one is different. So none of them match dollar for dollar what Bitcoin price is, but they are correlated, not one-to-one, but they are correlated with price of Bitcoin. So since March 13th, price is down. Now, many of those buyers came in as early as January, as we were talking before. So you would say net that they're probably still in profit. But in terms of the demand in the very beginning, right, we had that initial sell-off from Grayscale. That was kind of an anomaly. And then we had just like buying, crazy volume. And one of the things that we're hearing a lot about, that may be fueling some of the excitement or euphoria is the speed and velocity that money has poured into the ETFs faster than the vast majority of ETFs in history. Right. So that was noteworthy. I think that a lot of people were taken by surprise, in the TradFi world. A lot of people were taken by surprise by that. And so maybe, does that speak to future growth? That remains to be seen, but I just don't see the demand fading quite so fast.
Yeah. One last
considering they haven't
ahead.
launched very many products yet.
Yeah, exactly. That's worth noting. And I want to clarify, in terms of like overall price action, like, in terms of trend development in the Bitcoin price, I don't think ETFs are likely to have much of an effect. I do think that they dampen volatility. I think that this is uncontroversial. I think that it's very difficult to see the same kinds of, 10x days or 90% down days that Bitcoin has had before. When they, with all of these ETFs live, just because these funds do manage, manage the books, and it's they can absorb a lot more than I think Bitfinex and Bittrex and such were, and Mt. Gox were able to back in the day.
Would it be a horrible thing? And XBT3D is saying issue from his side is not the ETFs themselves being cash create rather than in kind. He just doesn't feel that they're positive for the space, and I can't argue with that, right? Like, would the world be better play? Would the world be a better place without ETFs?
The problem with
the ETFs here's a question for you, Mark. Will the ETFs, because of the volume that they can generate and of what they can absorb, will they serve over time to quell the volatility in Bitcoin? And if so, is that necessarily a bad thing?
No, it's not a bad thing. And yes, I think that they will. The other point that I think that our commenter is making about
XBT.
XBT, thank you, about whether it being cash created or something. And, I think Keith has already observed that there's this kind of like Bitcoin fundamentalism, about this thing is, if it was meant to displace or challenge like conventional financial structures, then for it to become assimilated inside of them is, counterproductive to that. But, you can further generalize that argument and say that the fact that Bitcoin ended up on exchanges at all and was, was exchangeable for dollars and things is also counterproductive. You know, there is a fantasy about whether or not, you know, the existing financial infrastructure is incompatible with cryptocurrency or with Bitcoin in sort of the spiritual sense. Because honestly, like, it's always been compatible with it. I think from a regulatory perspective and an enforcement perspective, there's been issues. But it's an asset like any other. Like, I don't think anyone who is I don't think that there are any true Bitcoin purists left, right? If you've ever exchanged Bitcoin on any centralized exchange, you've already, you know, handed back your purist card.
Bold statement.
They're going to start calling you.
Now all the Tinder comments are going to start coming in. It wasn't bad enough that you are a resident bear, Mark. Now you got to go there. I realized we've already been on here for about 40 minutes, so I do want to pass it over to you, Mark. There were a couple things there that I felt like we could touch on. I don't know if you have something special planned. Keith, thank you so much for going through all of that with us. It's always super insightful, and thank you to everybody who was commenting as well.
Yeah, we definitely appreciate the comments, and anytime you guys have something for us to discuss, throw them in there. That's great.
Yeah, absolutely. Mark, I see you sharing your screen now. Keith, I'm going to bring down the dashboards again. If anybody has any questions, please put them in the comments. Mark, are you ready for me here with your screen?
Yes, indeed I am.
Okay.
So, and I'll keep this relatively short because, you know, I use technical analysis in sort of a hobbyist sense, and there are far better technical analysts than I. And as I try to make everyone aware every week, the quality of the information that we get from material indicators is better, right? I'm essentially reading tea leaves when I look at charts, whereas we can actually see liquidity levels move. Like, this is literally what moves price. There's that's not correlation, that's causation. That is what causes prices to move. You know, the kinds of things that I'm talking about is more sort of like long-term sort of trend analysis. And I think that it adds, it can add perspective maybe to like how we think that the markets are going to develop, but it should never be a substitute for actual data, which is where Keith and Koryo, I think, add enormous value to sort of the dubious speculation that we discuss on these calls every week. But I wanted to revisit sort of the things that I was talking about last week, just to confirm that my bias hasn't changed at all. And you know, for those who weren't looking last week, I'll review this in just a minute or two, which is that, you know, on the weekly, which is generally the price charts that I tend to look at, Bitcoin has made a death cross, you know, with on the MACD, like way above center, which is generally a fairly bearish sign. You can see that we had a similar pattern develop at these levels during the last bull cycle twice, and both of them resulted in relatively large pullbacks. So from here to here, for example, was a 53% pullback. And then on the other cross, obviously, we saw this was the big one at the beginning of the bear, down 77%. And I'm not sure which one of these is more likely. I don't think that we're going to see another 80% pullback, either because the ETFs are dampening that volatility, and also because I'm just not convinced that the bull cycle is coming to an end. But I do think that we will have one of these catastrophic drawdowns, and that you know, I see nothing in the developing since last week that's, you know, going to change my mind on that. But one of the things that I thought I would do is to, you know, maybe add some flavor on how long these things kind of take, right? And maybe, you know, what does it feel like to be one of these people that bought the top and is riding it to the bottom? Or even if you didn't buy the top, if you were just, you know, interested, maybe you're in profit and you're wondering, you know, how much can you possibly, you know, hold on, you know, during a pullback or something like that. And, you know, what would it look like day on day, week on week? Like, how dramatic actually is a 50-something% drawdown over a significant length of time? So I think something like this is probably what we're looking at. So, you know, from the top over here to the bottom down here, this is a 53% pullback, and it took about 20 weeks to play out. And it was, you know, it was straight for a little bit, and then it was down, and then it was straight for a little bit, you know, but with an overall downtrend. Now, there's a couple of reasons why I think that, you know, this is where we are, or this is what might play out. One is that because I do pay attention to reversal patterns, I do think that they are quite reliable. One example of that is if you have a look at the top over here, we saw Bitcoin, you know, make a, you know, a higher high, and we do see in the RSI that the relative strength is disagreeing with the price action. And more than that, we started from a very overcooked RSI level, which was, you know, pulling back. And we've got a similar pattern today. It's not as dramatic, but the price action is more or less sideways. And you can see that we did start with a fairly overcooked position on the RSI, and the strength is certainly in decline, which again matches up with the fact that the MACD is also trending down, and we've made a death cross. To further that conviction, if you have a look at Bitcoin versus ETH, which is again just another numeraire, it doesn't really matter which numeraire we measure these things in, but the price of Bitcoin is also starting to look kind of bearish versus ETH as well. So, for example, you know, we were paying attention to this, or I at least did point out that there was an opportunity down here to swap Bitcoin into ETH and ride this up. And this was around about the time that this was happening. And then I said at the top of this channel, it's likely that we'll see a bit of a pullback. And so if you had made this trade when I suggested it, that it might be time to exit. And I was expecting that we might sort of revisit the bottom of this channel. But actually, ETH seems to have now rested at these moving average levels, right? If you can see these yellow lines, right. These are the EMA and SMA, and it actually seems to be forming a base here, and it's actually, this could be the breakout. And this overall structure on ETH, by the way, is a bull flag. You know, it's a right. very, very long played out bull flag. But yeah, in terms of ETH, this is actually looking very nice, which means it's actually probably not looking all that great for Bitcoin. So yeah, this pattern here is sort of, you know, bull flag 101. And so we are expecting ETH to start gaining on Bitcoin. I have no idea where ETH is headed. But this could be, you know, this is starting to look sort of breakout-ish, which could mean that either ETH is going to become very strong, or the price of ETH versus the dollar is just going to go sideways and the price of Bitcoin is going to come down. And I think that probably that's the macro structure that we're in. And so question is, like, what does that look like? You know, and I don't know if you guys can see this, but I'm gonna say that we start with a Bitcoin price. Let's put this here over here. We start with the Bitcoin price of, let's say, 69K, right? Because this is around about where this thing started. And what I'm going to do is I'm going to say that we're expecting, let's say, a drawdown of like 50%. So let's call that 0.5. And so the end price that we're trying to get to is going to be, you know, 0.5 times 69K. So we're going to, you know, expect, or we're going to model what it would look like week on week to actually draw down to 35. And we're going to do it using a geometric sequence, meaning like if you draw down by a certain percentage every week, then what is it going to look like? And this is relatively easy to do. I'm not sure if you've seen this before. So if we say that this is the end and this is the start, we put in 69K here, then what we can do is we can say, fine, we're going to take our start price and we're going to multiply that by the end price over the start price to the power of whatever week it currently is as a fraction of the number of weeks that we're trying to model this over. And apparently I've made a mistake. Yeah. Excuse me, give me 1 second. I'm going to put this, that 69, that 34, so I need to paste that. There we are. Okay, let me do that again. Start multiplied by start over end to the power of whatever week it currently is divided by however many weeks into this process we're going. And I'm just going to quickly make some of these cells constant. So all except the number of weeks. Okay, so I'm going to drag this number of weeks down to 20 weeks.
Did you put 12 weeks in your equation, or did you do, or in your formula, or did you do 20?
20. It's 20. So these are all referencing the right things.
And just for clarification, Mark, are you doing this like, did you pick these numbers just to illustrate this, or are these actual target numbers you're looking at?
These are just illustrations. So this is just looking at, you know, like if we pull this back up.
Because if we had a target of 34.5, I got to go redraw some shit.
We don't necessarily have a target of 34.5. Well, I'll tell you what, we can, like, let's choose a target that I think is probably more realistic. Something like 49.
Well, you guys were talking about, like, okay.
Something like 49 is, I think relatively, and I think, what's happened here? I've got to do...
It doesn't matter. Scare people. Take it to 25.
I think I got to flip this around. Okay, where have we got? The start multiplied by start. It's going to be end over start. So this is the other way around. There we are. Good. Okay. So yeah, the question I'm trying to ask, right? Or the thing that I want to sort of get a feel for is week on week, like how bad does it need to be before you get to this price target after 20 weeks, which, as we saw, is roughly how long it took after this initial, you know, push up during the last bull cycle.
Right, and that was really the first distribution phase of the bull market. I mean, and many pure analysts, including XBT3D, think that was really the top.
Right, exactly. And so what I'm trying to ask, is, like, when does it look frightening? And the thing is, when you're in a distribution, it doesn't feel frightening at all. What I'm trying to show here is that the price after 1 week here is still 98%, right, of the price that it was the week before. This is just a 2% drawdown.
Right, because when they grind you down, you don't feel it as much.
And this is what I'm showing, right? This is a geometric sequence. And so what we're looking at is how many times can the price go down 2% before you are reaching these targets. And this is the point, is that if you're doing this for 20 weeks straight, which again is exactly what this drawdown looked like, and obviously that was kind of violent in the beginning, but these more sort of managed trends down, they can feel very gentle and they don't invoke panic. But on look back, you realize just how far you've come, right? 20 weeks straight of 2% down is where the 49,000 target would take us to. And if it was if it was more dramatic than that, if it was a 35%, a 35K drawdown, that's still only 3% every week.
Right.
And, you know, obviously it's going to be up and down and so on, but it's just amazing that, you know, such a small difference, as long as you keep it consistent, can take us all the way down there. And so it's not, you know, when I say these very bearish things, they can seem very doomsday, catastrophic, the sky is falling kind of thing. But remember, I'm looking at very long time frames. Like a lot of my price targets are 20 weeks out. And, you know, while I said before, I think 35K is probably a little bit too optimistic or pessimistic, depending on your perspective, I do think somewhere around the 40K is probably realistic. And even the 50K level, I think, is almost certain at this stage. And, you know, the difference between, you know, the 50K level and the 40K level really isn't that much. It's just like 1% a week in terms of like how fast we approach it. So yeah, I wanted to give that perspective that, you know, basically, in addition to the stuff that I said last week, I do think that we are headed farther down. I think that at least this 40, 45, 44K level, which is the bottom of this channel, which, you know, you may have seen has been on my chart since forever. I do think that revisiting the bottom of this wouldn't be terrible. And it would also happen to coincide with some of these other slow moving averages. Like by the time we get there, the the 200 close is probably going to be at the top of this channel. Like, or we could just move sideways into it.
Right,
But yeah,
right. And I have confluence with that as well. I think the question, really the question now is, do we, can price stay above 58, which would be a support level, your early distribution range, where you're showing your divergence up there at 58 to 62-ish range, on the prior one, back in 2021.
back here.
That's probably, that's the technical level, where we could see, a range. That's an important range, right? So if we lose 58, we're losing those closes. And then we have to reevaluate whether 50 is going to hold or we're going down to 40. And if we get there, is there indeed a recovery? I also have a trend line, that runs right through there. So, if it were to happen today, which obviously is not likely, if it were to happen today, the 50-week moving average is right at 45, is just about at 45K, and the 200-week is down there at 36. Like Mark said, this is likely to draw upward over time. So if it did take 10, 20 weeks to get there, then we could have some, we could be running right in with the trend line, support line from the beginning of the year. Actually, started in October, November. That would be a touch on support. And man, if that holds, number one, if we went there, what an opportunity it would be. And if it holds, then that clearly would be the leg for the move up. So right now my eyes are on that that low 60K range, high, 58 to 62-ish. I want to see what's going to happen in this range.
And then the other thing I wanted to share was, I almost never share the monthly chart because it's like waiting a whole calendar month for a candle to close is like kind of frustrating for people. So this is very much like watching paint dry. But there are some very nice looking sort of patterns here. So for example, we've only had these slower moving averages at the 100, show up since the beginning of the last cycle. But it wouldn't be weird. Like when you're looking at the daily charts, it looks like we have this bull market support band, held up by these like super fast moving daily averages, and this is all nicely fanned out and so on and so forth. And then we start to roll it back like to the week. Again, these fast moving averages are so far holding. And by the way, I should say that we are checking that moving average right now.
Look at where the 21-week moving average is right now.
Exactly. Right. We got a long. It's like 50 all the way down. Right. Oh, this is the
21 is right. Is at about 63 right now, I think.
Right.
And what's liquidity look like at 63? Liquidity at 63 doesn't look that good to me.
Doesn't look that good, right?
No. Interestingly, those purple whales are buying pretty aggressively today. So I wonder if there's some ETF demand feeding through that range right now. This is kind of interesting. We're seeing liquidity move around and stuff's getting pulled. Typically when we see stuff pulled, things are getting a little trappy, but I'm seeing it pulled in both directions. So seems to be a bit of smoke and mirrors going on right now. I'm not really sure what to make of this. It's a time to watch candles develop and not rush, be patient, and see if things can come into focus for you. I do like that we have potentially, bottoming out here in the 64K range. But gosh, we've come this far. I'd like to go, and yes, selfishly, I'd like to go a little deeper.
Yeah. But I think my advice is always the same, which is, don't feel compelled to buy into anything that anyone's telling you on this call. Make your own decisions. But the perspective that I want to provide is that things look like very, very uncertain. And I think it would take a lot of balls to to be buying this level with size. I think if you're looking to scalp some stuff and you expect some like short-term, positive price development over the next couple of days or weeks, then I think that that's a totally educated position. But this isn't a time to be remortgaging or refinancing your house or something to invest in Bitcoin.
No. But if one of you guys want to flush it to 60 or 58, I'm good with that.
Yeah, and if any of the Bitcoin whales are listening, the Mt. Gox guys or the DAO hacker,
is this thing on? if you want to flush it to 58, go ahead. No, I don't really see much in the way of bid liquidity down at that level. Really, 60K is where the concentrations are, 60 and here at 64K. So maybe we don't get below this. Maybe I sold myself a little bit short yesterday, but oh well, is what it is. Profit is profit, and I won't complain about that.
It's so nice. You can tell that you're like a seasoned trader by the way that you just say that so casually. You know what? Oh well.
Well, you can't get upset over it. That does is stress you out and force you into making stupid decisions, right?
Plenty of people do this. This is something we talk about, the emotional aspect of it, right? Anytime you buy something or you sell something, it's like you're suddenly watching the charts 4 times harder than you were before just to see if you had made a mistake or if you had sold too soon or bought too soon or whatever it happens to be, right? To just be like, it's done. Oh, well, so be it. And walk away. I enjoyed my Father's Day weekend. Like, it's a good feeling. You can tell that you have been trading for a while,
Right. For what it's worth, the time with my family was a better investment.
Yeah.
Cheers.
I actually saw a comment, cheers, and happy Father's Day to you.
Thank you.
Saw a comment and somebody was like, I suck at trading. I, never know when to sell. I never know when to buy. And it was like, I had responded to them on Twitter and I'm telling you, it was like 3 of the main things that you guys say. And one was like, have a plan when you're going into this, right? Like, don't let the FOMO get to you. You name your price targets. Like, this is where I want to, my ideal target to start buying and selling. And then this is mine to start selling. And then that's it. Like, no emotions. Set the orders. You know what I mean? Set your bids,
if I was sitting in front of the computer
don't get
all
greedy.
weekend, if I was sitting in front of the computer all weekend, I would have contemplated whether or not I wanted to make that trade or not. And there's something to be said for setting those parameters up and walking away because there is no emotion in the decision. I placed the order with no emotion in it. Just knowing that I wanted to protect profits. And I have reasons for that, I don't know, college to pay for in a month.
Because it's profit. I mean,
right.
Like
so rather than give more of it back, I chose to protect more of it. And, had I been watching charts, I might have made some adjustments to where I placed that order and maybe wouldn't have gotten wicked out, but I did. And I'll live with that and I'm fine with it.
Yep. And that's how it should be. A little bit of training for ourselves, right?
Yep.
Do you guys, we've been on for a little bit over an hour. First of all, the, viewers are all amazing. Again, thank you for your comments and for tuning in. Once again, we have, just shy of 1,000 viewers. So it's really wonderful. Mark or Keith, do either of you have anything that you want to add? Or any last comments or questions from our viewers?
Nothing for me. I'm gonna wrap it there. I've actually got an appointment to head to, but this is what I'm watching. I'm watching this area of liquidity to see if more moves into place here to give me some more confidence in this level. The ladders that are there are pretty subtle. The fact that they exist at all is good, but you see stuff moving around here, like it appeared here and then some moved up here, some moved down here. So that to me tells me these guys aren't real confident either of where price is going to go. And so, these are times when it's good to, as I said before, watch candles develop before you make a hasty decision.
Awesome. Mark, anything that you want to add?
Nothing to add.
Okay. Well, you guys are awesome as always. Thank you so much. Thank you to all of the viewers. We will see you next week on our 1-year anniversary show and our 50th episode. I know. I can't believe it's already been a year.
That's crazy.
It is crazy. It is. You guys are amazing. Awesome. I will see you next week. Thanks again, everybody.
All right. Thank you. Have a great week, everybody. Good luck. Trade safe.
Thank you, Keith.
Trade
Thank you,
safe.
Jen.
See you guys.
Cheers.